Welcome to today's episode of the Investor Dictionary, and today I'm looking at a piece of terminology by the name of cost accounting. It's something that you might have seen bandied around in the financial press from time to time, but it's something that you will definitely not see within a company's financial statements generally, but you may hear it mentioned if you're actually physically attending the company's annual general meeting and the financial officers are giving some sort of forecast relating to what they're expecting the company to be doing over the course of the up-and-coming days, weeks, months, and years. And what cost accounting effectively is, it's a method of accounting, obviously, that is used to calculate what the cost of manufacture of a product is. And taking this into, for instance, into the restaurant trade, your executive chefs will have a vast amount of knowledge of cost accounting skills, because your executive chef needs to know what is the cost of each plate of food going out of the kitchen, so that he knows that the price that's listed on the menu is enough to be able to cover all of the costs of the food on that plate. And the costing that a chef would use for a plate of food would cover the ingredients. It would cover the energy consumption to be able to cook that food. It'll cover the number of minutes of wages of each of the different people within the kitchen staff that will be preparing that plate of food going out. It'll be covering the X number of minutes of the wages of the waiter that would be delivering the food to your table. And lastly, it will be covering the cost of the pot and plate washer that will be cleaning up everything after the fact. And all of that gets reduced into a cost per plate of the different items that will be on the menu. And if your chef doesn't do an accurate cost accounting calculation of what the costs of things going out of his kitchen are, the chances are that he'll be having things listed on his menu for cheaper than what they cost to produce, and that will result in losses for the restaurant and ultimately restaurants closing down. And invariably what you'll see is when you see many restaurants closing down, it's simply because the executive chef or the owner, you've got an executive chef that's also the owner of the restaurant that maybe doesn't have a cost accounting background and hasn't been able to calculate accurately what the costs of each plate of food are. But the same method of cost accounting that I explained for restaurants will work for factories, will work for any business that produces goods, that incurs costs to be able to produce goods. That's my definition of cost accounting. Post your comments and questions down below. If you like these type of videos, give it a thumbs up. If you don't like these type of videos, give it a thumbs down. That way I can plan my content for the future more accurately. And share this out amongst your friends. And last but by no means least, click the big red subscribe button down there. That way you can stay subscribed to my channel for all of the new videos that I post on a day-to-day, week-to-week basis. Stay carved up for the win. I'll see you next time. Cheers.